Okay. We'll probably have a wrong visual there.
Yeah.
But so sorry about that. Sorry, Mike. I was listening to you on that one. But you see, we have this 10-year period.
Yes.
Is it enough time for them to get their act together and actually, put forward the plan? Or is this something that even after 10 years, we expect it to continue?
We should not expect that it should just be 10 years. It's just a target date that the SEC is looking at. Okay, at least let's start something that we can say, look forward to the next 10 years. Actually, the FSS, the 2020, that is a master plan for the federal government, that the financial institutions in Nigeria, that look, by 2020, Nigeria should be the financial hub for Africa. This capital market plan should dovetail into that and go beyond and say, look, yes, if we have to be the financial hub for Africa, the capital market has to be the centerpiece. Because money market is fine, but the capital market is the one that drives the economy.
Yes, I was just going to ask you, if we know that the capital markets contribute so much to economic development, what would happen? Because that's what a lot of people say, that actually the capital market contributes to economic development. So much so that if something were to happen to the Nigerian equities market, for instance, what kind of impact would it have on investors?
You saw what happened in the past 5 years. So that is the kind of thing that can happen. And it becomes more devastating if the market is bigger. The market is bigger and it affects a lot of areas. For instance, just one area was affected by that of the US, and that is the mortgage market. And that brought down the entire economy. And you now saw how much trillions the US government is putting in the market to bail the economy out. That's to show the impact. If the capital market is well developed and becomes all abrasive, when it goes down, it can be disastrous. It can bring down the entire economy. But you see, the beauty of it is also there are safeguards these days that can make a turnaround quick, very quick. That's
for the Nigeria capital markets?
Yes. Okay. So it's just that people's confidence, they had never been beaten before, now they were beaten. That's why we had the situation drag for so long. But in this case, once the safeguards are there and people are educated and they know that, yes, things go up and down, then they will easily recover from such shocks. And also, that's why we are also looking at collective investment scheme that reduces the risk for the individual members.
This collective investment scheme, who actually puts it together? Is it the Nigerian Stock Exchange or the SEC or stockbrokers, or who actually does this?
It's going to be the SEC sets the regulation and the guidelines, and then it is now left for the operators of the market to start the process of registering or setting up investment schemes. And then, of course, people join from different angles. Stockbrokers are going to drive it eventually.
All right. I guess that's what I was actually driving at, the fact that who are actually going to be controlling it, because
stockbrokers are going to drive it.
Okay. And then you have people coming in from various sectors also to participate in the collective scheme as well. Now, some months ago, the forbearance was granted to some capital market operators. Has this really made any major difference in the market?
Well, I don't know. I don't think so. You see, like I said once in this program, the forbearance actually favored the banks, not the stockbrokers. It's the banks that were favored, not the stockbrokers. But when some brokers looked at it and said, well, what's the special thing about it? Some of them did not even take it. So some brokers didn't take it. Some who took it, well, they got the relief they wanted, and that helps them to go back to business. But other than that, I'm not sure there's any other thing.
Okay, so what is the best thing right now for stockbrokers? If they look at it like the forbearance package wasn't a win situation for them, how can they? Because I guess that package was actually given to them to help them stabilize in order to continue being the best that they can be in the market. So what will help them at this time for those who refuse to take it anyway?
Those who refuse to take it have alternatives. They've put measures in place to say, look, we have to survive. And they put measures in place to make them survive. They've raised capital from their shareholders, and they are moving on.
Okay.
You see, there's right now what the market wanted, which wasn't done, was a direct infusion of funds into the market, a direct intervention. But that wasn't done. You saw US directly intervenes and is still doing that. Now they are saying, okay, we've seen the market recover a lot, they want to reduce, they want to move down a little. But they've been directly intervening. And what is expected of this market was that government should have intervened directly. But since they felt it was not wise, the best thing they could do was to give forbearance, well and good. But that is past.
Now, the Securities and Exchange Commission, as in we're coasting home now, has inaugurated its 3 committees, and you've actually listed what we should expect from them in the time frame. How much support are you expecting they're going to be getting from market operators in terms of actualizing this plan?
No, first, the operators will want to see the plan. And until we see the plan, we cannot preempt what support we will give. If the plan comes out and is what we expect.
Yeah, now based on the issues that you already know you have on ground,
Yes.
and that's the stockbrokers actually trying to grapple with.
Yes.
What kind of support are you going to be expecting to?
No, you see, the one that affects stockbrokers, they implement. The stockbrokers are interested in implementing new products. If the plan comes and says, hey, these are good products that you can implement in, stockbrokers will wholeheartedly accept them. Stockbrokers will not, you see, it's not our place to protect or to protest against a plan that is good. If the plan is workable and good, definitely brokers will support it. I mean, if you ask stockbrokers whether they want multinationals to be listed, to list their companies in the exchange, would they refuse? Stockbrokers will be very happy about that. If you say we should go now, if you're educating, if you bring in measures that will educate the public, our stockbrokers will be happy to do that, because when you have an educated public that understands the market, then you are going to have more people invest in the market. So stockbrokers will look at such things. And like I said, it has to be tied to the stock exchange plan of, hey, we want to have a market cap of $1 trillion. That is key. Whatever plan that does not incorporate that will not be in the best interest of the market. The stock exchange is the hub of the capital market. Therefore, if the stock exchange must drive us to that destination, then the plan must support that. The plan must not be going somewhere else.
And also must not be at variance in what
exactly.
it is.
So that should be the goal, that look, all of us are working to make the Nigerian capital market a world-class capital market, and a world-class capital market that people can, from all over the world, can put money in, and you get $1 trillion within a short time. The effort should be at getting Nigerians involved, getting outsiders involved.
When we were having this conversation, you mentioned that you wanted to correct this impression that the fact that the all-share index has dropped below the 36,000 psychological line isn't something to panic about.
Yeah.
And from what we've seen on the paper, and what we see the numbers looking like, the numbers have actually shown that there's been impressive recovery from the beginning of the year till now.
Yeah.
But how can this recovery actually be sustained?
All we need is to see more performance from the companies. You see, the driving factor in any market is how companies reward their shareholders, and that is predicated on their performance. So as we see third quarter results coming, we are going to see a different thing. And from the first 2 quarters we've seen impressive performance, I believe that by the third quarter, if the performance is sustained, you will see that the market will go back up.
Well, thank you so much, Mike, for joining me on the program this morning. It's been quite informative and educative as well. Well, I've been speaking with the former president, Chartered Institute of Stockbrokers, Mr. Mike Iteboje, and we've been reviewing the Securities and Exchange Commission's 10-year master plan for the capital market, and it seems like they've got their work cut out for them, especially in terms of educating the public about what goes on at the capital market. Well, this is a developing story. It might not develop as quickly as we want it to. We have a 10-year period to look at it. Well, that's the program for today. Thank you so much for being a part of it. I'm Harriet Agbeni.